Okay, so today we're talking trading small accounts. And I know often you hear that you need a big account to make some serious money, which is true. But that doesn't mean you can't start small. So today I'm going to talk about a couple of ways that you can grow a small account fast. So one thing you have to understand is if you want to grow a small account fast, there is going to be a significant amount of risk. But with that being said, you're starting small. So is there really that much risk? So I'm going to be talking about two different ways that we can trade. But at its core, I want you to understand that you are going to be risking more than you would normally if you were trading a big account or, for example, a prop firm account. If you wanted to start a small account and grow it slowly, that's different, right? And you would need a lot of patience to do that. So I suppose that's the third way is if you have got a lot of patience and a lot of time and it's something that you want to grow over time, then that's another way you can do that. You can just risk, your 1% per trade and just slowly grow it, but never take any withdrawals. That's the key, I think, when you're trying to grow a small account is to leave the money in there and let it compound. So for what we're talking about today is you don't really need that much capital to start. So let's talk about transforming your small Forex accounts into something amazing quickly and efficiently. Are you ready? If so, let's dive into this exciting concept. If you didn't know already, my name is Brett, your guide here at Blue Edge Financial, where we make day trading not just profitable, but fun as well. So let's dive into the world of trading without needing a hefty investment to start. So the key here is you need the right strategy. I'm not going to be talking too much about strategy itself because I'm assuming that you have already got a strategy that has an edge, okay? So that's the key, right? You're going to need a strategy that has an edge. And what I mean by that is it's consistently profitable. Whatever your edge is, if you are only taking a small risk reward like a 1-to-1 or a 1-to-1.5, but you're hitting a 70% win rate or an 80% win rate, then that's fine. If your win rate is lower, but you are actually taking bigger amounts, let's say your risk reward is 1-to-5, for example, you don't need a very high win rate. So whatever your strategy is, you've just got to make sure that you have an edge on the market. That's very important. And like I said, guys, I'm not going to tell you what strategy to use. If you would like to get a strategy or you'd like to, maybe get some ideas of strategy, look back. We've got so many videos. I've done a lot of videos recently where I talk about a lot of different strategies that have got an edge. I teach you how to use them. I go through back testing. I do the whole lot. So if you haven't seen those, make sure you go back and check them out because I'm pretty sure you could find a strategy there. And if not, the internet is full of strategies that work. And I've talked a lot about how to back test and how to make sure a strategy works for you. So make sure you check out those videos as well. The next thing you'll need is capital. And for the first example I'm going to be talking about, or the first plan of action I'm going to talk about, you only need about $20. So your capital really doesn't need to be that high. The second one, I would suggest you start somewhere at $100. So, most people can afford that. With that being said, let's dive in and actually look at the plans of how to grow these small accounts. So like I said, I'm going to be going over two different ways that you could use to grow a small account. One of them is a lot riskier than the other. Now, a quick word of caution here, guys. These plans, the first one in particular, are kind of like riding a roller coaster without a seatbelt. It's thrilling, but very risky. So if you are new to the world of trading, take a moment and watch some of the other videos I've done recently where I talk about risk management and some of the other concepts in trading just as a sort of a briefing before you dive in over here. Okay, so with that being said, guys, the first plan I'm going to talk about is something called the 20 pip challenge. Now, I'm sure if you guys have been on the internet and searched around for how to grow small accounts, you probably have already come across this concept. I'm not going to go into too much depth about this one because, like I said, there is so much info out there on the internet about this. I'm just going to go over the main concept of what this is and how it works. Now, to do this, I'm going to show you a chart which can help explain this. Okay, so if you guys are looking at my screen now, you can see this is the basis of the 20 pip challenge. Now, essentially, you're starting with $20. This is the one I said to you is a lot riskier than the other. You're starting with $20, and every time you place a trade, you're risking 23% of that account. Now, bearing in mind, guys, if you are going to be doing this 20 pip challenge, you've got to look at it as just a bit of fun, because you cannot trade this long term. This is just, have a bit of fun. See how far down this ladder you can go. If you can go all the way, it's pretty amazing, because you can start with $20 and you can end on $52,000, which is crazy. But the further down the ladder you get, the bigger your risk is going to be. Like when you're here on step 25, you're going to be risking $2,500 of a $10,000 account. And if you lose that, it's going to hurt a lot more. But let me go over the concept of this. Essentially, you're only looking for 20 pips. And another very important thing I need to say about this kind of a challenge, because you're starting with a very low balance, you will need a broker that can give you a 1 to 500 leverage account or more. Because I don't think you're going to be able to do this on an account that has like a 1 to 50 or a 1 to 100. But you'd have to check yourself. But I would say anything greater than a 1 to 400, 500, I would say is kind of what you want to be using, okay? Because you need that leverage, because if you're risking 23% of an account, especially when you're starting as low as $20, you're going to need a broker that gives you that leverage. So essentially, all you need, whatever strategy you're using. Now, some strategies might be a little bit more difficult, because like I said, if you're using a strategy that has a lower win rate, but it has a higher risk reward ratio, it doesn't really matter, because you're only looking for 20 pips. So the amount you're actually making is always going to be that 20 pips. So maybe look at jumping into this with a strategy that has with like a 1 to 1 or a 1 to 1.5 that has like a 60, 70, 80% win rate. That's kind of what you want to be using for something like this. So the idea here is, guys, if you start here, and this is the important thing, you're only ever starting with $20, right? So you can kind of jump in and do this as many times as you want, because it's only $20 and it's a bit of fun, but you could actually make a bit of money with this. So you would start with $20, you would risk 23% to make 30%. So you would have to figure out exactly how far 23% you're risking. So whatever your stop is, so wherever your profit target is 30%, you've got to figure out where the stop would be for that to be 23%. You've got to work out that. I'm not going to go into too much detail about that. Like I said, there's a lot of videos about that. I'm just going to be talking about the whole concept of the ladder and how it works. So you'd be risking 23%, right? Risking $4.50. Your profit target would be 30%, where you would make $6, okay? So your stop loss, here we go. This is important, guys. Your stop loss is always got to be 15 pips, and your take profit is 20 pips. Now, this might not work for every strategy, like I said. So the idea is to get as many wins as you can in a row. And if you have a strategy that has, like, on average 3-4 wins in a row, and only on average 1 or 2 losses in a row, then that could work. You're going to kind of be jumping a few steps forward and going a couple back. Few forward, couple back. So it might take you a little bit longer. I think it's very unlikely that anyone will go from 1 to 30 without taking a loss, but you never know. So you've got to be prepared that you're going to be going up the ladder and then back down the ladder, up the ladder, as long as you're always going more steps forward than you do go back, okay? So you would keep working your way down this ladder. And as you can see, you're always risking that 23%. And as you can see, you very quickly would go your end balance with 26, 34, 44, 58. So for the first like 10 to 20, okay, so let's go up to 15. You're looking at, your balance is starting to get big. Now, there's something you can do as well, is once you've gone like 2 or 3 steps in this challenge, let's say you've hit the $44, you can take $20 out. So you essentially are, you've taken out the money to buy into the next game. And that's what this is. You got to look at this like a game. So you would basically take your $20 out at this point, and then you have your next $20 in case you kind of go all the way back and you lose everything. You've kind of got your next buy in, and then you would basically start again, and you would get back to kind of, you know, going up the ladder. So let's say you've got a 70% win rate, right? So you'd be, for every 10 you'd be losing 3, so you'd be going like forward and then back, forward and then back. You know, you could work your way up this ladder pretty quickly, but the idea is that you could get from that $20, all you would need is, I mean, 30 trades in a row, but probably it would take a lot more than that. But you need to go 30 steps. Okay, let's do it that way. So every time you lose, you would just go back to the previous step. So that's how this is designed, guys. That risking 23%, which is 15 pips, to make the 30%, which is the 20 pips. Okay, you're just looking for 20 pips a day, which should be quite easy to do with most strategies. And you're just working your way up, and you can see that you can get to a point where you'll be risking some serious money. Like over here, you'll be sitting on like a $23,000 account. You'll be risking $5,000. If you were to lose this, you would then go back to this stage over here. You essentially would be, you'd be jumping back. Because look, if you look at the profit from 27, you made 5,504, which is exactly what you're risking. So essentially, every time you win, whatever you win on the stage before is what you'll be risking on the next. So you can see how that works. So whenever you move forward a step, if you were to lose, you just move back a step. So that's how this works. You just keep working your way up the ladder, and it's a pretty cool way to look at that. So take a screenshot of this, and you can find this. I literally just typed online 20 pip challenge, and this came up. You can find these for free. So make sure you go and have a look, and you can download this so you can start tracking your 20 pip challenge. Let me know if you guys do this and how it goes. And remember, it's just a little bit of fun. You're only risking $20, but that $20 could potentially become 52,000. I wonder how many of you could get to the 52 grand mark. You know, maybe we should do a little challenge, see who can get there first. I'm keen to do it. I'm keen to jump in and start this 20 pip challenge. I've got a lot of other things I've got going on, so I'll have to just, you know, wait a little bit. But once I've got all my other challenges out the way and things I'm doing, I might jump in and do this and just track my progress and see how far up the ladder we can get. You know, even if you got to like 25, 26, you're sitting on a $14,000, $18,000 account. If you want to pull the plug, then you can, because essentially you're starting on $20 and you work your way even up to $10,000, pull the plug, put that into your bank, start again. You know, how many of you will be able to go all the way to 52, I wonder? So that's the first way I'm going to talk about, the first way that you can grow an account, guys. And it is fun. It is more of a game, but there is, you know, there's a lot of maths in there, and it's a pretty cool way to grow an account. Whether or not you want to try it or not, remember, you're only risking that $20 to start. So, you know, it's not such a big risk initially, and you've always just got to think, I started with $20, because once you start getting down the ladder to these steps down here, you're risking $2,000, $3,000, $4,000, $5,000. If you start thinking about the monetary amount that you're risking, you probably won't be able to go all the way to the 30th step. Okay, so you've got to just try and remember, I only start with 20. Whatever happens, I'm going to go as far as I can. I want to get to that final step. So kind of play it like a game more than trading. So that's one way you can grow an account. Now, the other way I want to talk to you about is a little bit more practical. I think it's a little bit more kind of how I would trade my own small account if I was starting small. And again, guys, it's very important that you need to have a strategy with an edge. There's no point doing a small account, trying to grow a small account, if you don't have a strategy that has an edge. You're just gambling at that point. You need to have an understanding of your own strategy. You need to have back tested it. I'm not going to talk about that. I've got so many videos that I've done about strategies, about back testing, about getting a strategy that works for you. So bear that in mind, guys. I'm talking about having a strategy that you know is consistent and is profitable and has an edge on the market, okay? It's very important that you understand that first. So for this is basically taking as much as you can put in to a live account. So, you know, for some people it's only $100. Maybe you can only risk $100. And remember, it's important to, at this point, say that what you're starting, whatever account size you're starting, is an amount that you're willing to lose, okay? Now, if you want to grow this account fast, you have to risk more. So if you would normally risk anywhere from 0.5 to 2% per trade, if you're going to be doing this and trying to grow an account, I would say you need to be risking 5, 10, 15, even 20% per trade. Yes, it sounds like a lot. It is a lot. But when it's a smaller amount, you've got to look at the monetary amount. When it's a bigger amount, look at the percentage, okay? Now, the idea with this is you're going to start big. And as your account grows, you can reduce that risk. So let's say you're starting 20% and you grow that account by 200 or 300%, because that's possible when you're risking that much, as long as you've got a strategy that works. Then as you're getting to that point, you will drop down to 15%, 10%, 5%, and eventually you'll be trading with a fairly big account size that you've grown to a certain point. So at this point, you'll be risking kind of what you would be risking on, for example, a prop firm account, and you'd kind of be back to what most people are risking anyway. So the idea is to start big and then slowly reduce as your account gets bigger. And the other important thing is just don't take any withdrawals. Allow the compounding to take effect. This is all about compounding an account, okay? So I'm just going to talk about this quickly, guys. The simple way is, let's say we're starting with a $100 account, okay? $100 account, we're taking 10 trades per week, and we're risking 10% per trade. And we have a 60% win rate with a risk-reward ratio of 1 to 1.5. I'm using this as an example because it's one of the strategies I use. Those are the exact numbers for my strategy. I have about a 60% win rate with that strategy, and I take a 1 to 1.5. So if I were to start with $100, I would basically, let's say I'm taking 10 trades per week, which is one of the strategies in the strategy I'm talking about. I can definitely get 10 trades per week. I'm getting 6 wins, which if I'm risking 10% per trade, if I'm winning, I'm making 15%, okay? So 6 wins times 15% is 90%, and then I've got 4 losses. So those 4 losses are 40% because I'm risking 10%. So the profit for the week is 50%, okay? 50%, that means I'm growing $100 from 100 to 150 in a week. That means in 2 weeks, I'm doubling my account, okay? So let's just have a look at that in terms of compounding, okay? So that's all it is, guys. That's all it is. Number one, have a strategy that has an edge. Very important. You cannot do this without a strategy that has an edge. If you don't have a strategy that has an edge, or you're still taking more losses, then I would say you still need to practice. Open a demo account. Do this on a demo account. Open a demo account with only $100. Start practicing as if you were going to trade, you know, practice. So there's no point opening. A lot of people I see open a demo account for $100,000. And then once they've gone through that and they've risked whatever they risk and they say, okay, I'm ready, they go and open a $100 account. You're not prepared because you've been trading such big numbers that when you go to 100, it just seems off, you know? So whatever you're planning on opening, if you're going to start with a demo account, I would say open a demo account with that amount. It sounds crazy, but open a demo account with $100 and use that to trade, okay? So let's have a quick look, guys. Okay, guys, so I'm just going to jump over to this compounding calculator. You've seen me use this many times. Now, you've got to take this with a pinch of salt. It's very important that a lot of people will fill this in and think, that's it, this is what I'm going to make. And I'll show you why you've got to take this with a pinch of salt, because at the numbers I've just shown you, okay, no one can maintain that, because if you're risking 10% per trade, when you get to, you know, $1,000, you're risking $100 per trade, which is a lot for that size account. And when you get to 10,000, you're risking $1,000 for every trade. It starts getting, a bit ridiculous. But if you were to continue doing that, this is why I'm saying take this with a pinch of salt for a year. A whole year, you're making 50% per week, okay? And even that is unrealistic. I think that's unrealistic. I think maybe some people can do that, but we'll look at a few different ways that you can do that. But I just want to show you this, guys. 143, what is that, billion. So that's why I'm saying take it with a pinch of salt. So the way I would do this, I'd not look at it over a year. I would actually go, let's do this for 2 months, okay? Let's trade this. We start with $100. We're getting 50% per week, okay? And let's have a look. Calculate that. 3,300. Let's say we're on about 3,000 at that point, okay? So now we can reduce our risk. So we're going from 10% per trade, risking 10% per trade. We're going to drop down to risking 5%. So this will halve. We're now going to be making 25% per week. And let's look at this after another 3 months. Another 2 months after with 3,300. So 2 months after that, we're now sitting on about $20,000. So in about 5 months, if you were to consistently trade this way with this high risk, you could take $100 to like $20,000 in a few months, in 5, maybe half a year. Now, this still is very, very unlikely because I don't think there's very many people that will be able to stick to this, stick to the amount they're risking. You're risking that much, it's going to affect your mental game, and you're going to make mistakes, and this isn't in the perfect world. So let's change that a little bit, guys, and let's make this more realistic, okay? So let's talk about that 50%, okay? If we're risking, so we're doing 50% increase on a monthly basis now, okay? So every month we're increasing our account by 50%. So what I'm going to look at now, let's after 6 months see where we will be in 6 months, and we're going to look at our compounding monthly. So now we're saying, okay, this is a little bit more realistic. I would say that starting on $100, after 6 months, we're sitting on 1,100, okay? And you might think that's not that much, but if you're starting with $100, guys, that's an increase of 1,000%. You're increasing your account by 1,000%. That's crazy. That's crazy. If you were starting with, let's say, 10,000, just to put this into perspective, you'd be on 100,000 in 6 months, okay? You would turn 10,000 into 100,000. So when the numbers get bigger, you kind of see the power of it. So we're talking about $100 here, guys, okay? So let's have a look after 1 year. What are we looking at? And that's where the power of compounding comes in, right? So just show you that again, okay? So after 6 months, without changing anything here, guys, 6 months, $100 is on 1,100. Okay, you've turned $100 into 1,100 after 6 months. But after 1 year, this is how the compounding actually happens. I'll show you this on the chart. It's 12,000. So here we go. Look, after 6 months, you'll be sitting on 1,100, right? So in 6 months, you've only grown your account from $100 to 1,100. But if you keep trading that way, at the end of the year, you've turned $100 into 12,000. Now, the thing is, what is your risk tolerance? And as you're getting to these sort of numbers, you'd probably look at reducing your risk, okay? So you could quite easily, I would say, if you're patient, if you're not taking out any withdrawals, and you're just allowing that account to grow, allowing the compounding effect to do what it's meant to do, you could quite easily grow an account from $100 to that sort of 10, 12, 13, 15, $20,000 over a 2-year period. Let's have a look at this over 2 years. This is where it really kicks in. If you were to keep the exact same risk of 10% per trade, which is unlikely, you're not going to keep risking that. Once you've got to, let's say after a year, you're sitting on a $12,000 account, you're not going to be risking 1,200 per trade. It just doesn't make sense, right? You would start reducing your risk, and then maybe at this point you'd be actually risking, instead of 10% per trade, 4, 5%. You'd keep going a little bit higher. You'd get to maybe the $20,000 mark. You would then start risking maybe 2 to 5%. and you'd slowly reduce your risk. That's the idea. But if you want to just keep going and you've got a strategy that works for you, remember, every strategy is going to go through periods where it loses more. So you've got to be very careful. That's why I said you've got to take this with a pinch of salt, but it just gives you an idea. Okay, so those are the two ways that I would look at growing a small account. The first one is a lot more fun. And it's definitely something I suggest you guys try. It's only $20. The other one would be, obviously, you're starting whatever you're starting with, and that's what I wanted to show you as well. If you can start with $1,000, let's say, okay, and you're getting that 50% because you're risking 10% per trade. After 1 year, starting with $1,000, you'll be sitting on 129,000, and that just shows you guys, you know, the power of compounding. It really is amazing, but you've got to be patient. You've got to be consistent. You've got to have so much discipline to keep doing this. So that's the thing, is like, if you want to do this, guys, it is possible. It is possible, but you have to be extremely disciplined, okay? So depending on what you want to start, that is the other way I would suggest. Is just let the power of compounding take over, while risking a little bit more than you would normally. So, you know, instead of risking your 1, 2, and you've got to look at your strategy. What does the data of your strategy tell you? For me, this was based on my strategy with a 60% win rate, with a 1 to 1.5 risk reward ratio. I could quite easily, you know, get 10 trades per week, where I am, you know, risking 10%. That would be my number. I could make 50%. Now that's easier said than done. I understand that, guys, but it's just, this is all just theory. We're just talking about how you can grow a small account. So even if you were looking at, you know, maybe this over every 2 weeks, let's say profit, you know, 50% over 2 weeks, that's maybe a little bit more. You could hit that every 2 weeks. Then, you know, this would change a little bit. This would be wouldn't be weekly. It would actually be 100%. So it'll be actually bigger than that. 100% increase on your account per month. And after a year with that, I mean, it's just crazy. Those numbers will never happen because this, again, take it with a pinch of salt, but it gives you an idea of the power of compounding. And even if you can just make a fraction of that, it gives you some hope. It gives you some hope that you can grow a small account. So that's it for today, guys. That's the whole concept of this video, is that you can grow a small account. You can eventually make a small account a big account, but you have to have discipline. You have to have a strategy that has an edge, and you have to just keep hitting play. So I hope you guys enjoyed this video. Remember, it is just educational. It's just fun, but, you know, something to think about. And yeah, that's it for me, guys. Keep watching because we've got a lot of cool content coming, and we will see you guys in the next video. Bye for now.